very thrilled to have some guests from Augur here tonight. Joey, Tony, and also Ron Bernstein, the founder of InTrade, which is one of the original prediction markets on the internet. So a lot of experience there along that line. Welcome all. As you know, I also want to thank Rise New York for hosting us. It's very difficult to find locations in Manhattan where we can get this many people together, so I appreciate Rise for hosting us. We're going to be here once a month for the rest of the year, and we always have a great time. That said, if you have a location where we might be able to also host, let me know. And if you have ideas of what you'd like to see in the future from this community, let me know as well. I'm the organizer. Just send me a message and we'll try to accommodate in the future. Melissa, do you want to say anything? Yeah.
Thanks, Michael. Hi, guys. Welcome to Rise New York. If you have an empty chair next to you, can you raise your hand? Ooh, guys standing in the back, here you go. Keep them up. Keep them up. Let them get over here. Awesome, thank you. As Michael had said, we are super excited to be hosting Ethereum enthusiasts here through the rest of the year. We are a fintech-focused co-working space backed by Barclays Bank. We help startups who are in financial services and fintech connect with larger banks, corporations, the enterprise side of things to help get POCs and scaling going pretty early on. Most of the startups here are seed, pre-seed, so we specialize in sort of galvanizing and smoothing those inroads to some of the larger corporations and help them scale pretty quickly by joining with massive global institutions. So we do that obviously through co-working, which you walk through to get back here, through events like this, which build the community around fintech here in New York and at our sites worldwide. And then also through our formal accelerator program called the Barclays Accelerator, which kicks off actually in 2 weeks, so it's pretty exciting. So thank you so much for coming tonight. If you want to hear more about us, what we do, how you can get involved, how you can do cool shit like this with us, get in touch. My info is actually on the screen right out there where you have the list of events. My name is Melissa. And I will get off the stage now and let the cool stuff happen. So thank you guys.
Hi everyone, hoping everyone obviously can hear me and it's not too loud. I'm Tony from Augur, Tony Sakich, and the first thing I'd like to say is thank you for all coming out and thank you for Rise and the Ethereum meetup and everyone for hosting us. After me will be Ron Bernstein, who is the founder of InTrade. I would say the biggest prediction market that's ever existed in North America that I know of, and I don't think there's anyone bigger. You can let us know if I'm wrong. And then Joey Krug, the co-founder and the developer at Augur. I'm not going to go very long, but I want to talk a little bit about marketing because a lot of projects in the Ethereum space really, I think, want to know a little more about it, and that's the questions I usually get are involving that, and that's my expertise. So I won't get on long, but I will share a few tidbits with you. All right, here was a few keys of our success and kind of what we did. And for those who don't know, we had a very successful crowd sale last year, raising a little over $5 million in Ethereum and Bitcoin. And those are the only two cryptocurrencies we accepted, but we accepted many more through Shapeshift.io. A few things we did. We introduced the project. There were 6 team members when the project was formally introduced, but we put our full names up there. You knew who Joey Krug was, you knew who Tony Sakich was, Jack Peterson, and the rest of the group. That level of transparency is really important, especially because you plan a crowd sale. It's a controversial topic, but you really, really need to make that all clear because it builds trust, and not just that, but interactions with the community, which is I'm going to talk about in a minute. The How Augur Works video, which if you haven't seen, I recommend. We're not going to show that here today because I'm assuming if you're here, most of you know about Augur. If not, it's a 2-minute video. We have over 200,000 views on it in about a year. Been remarkably successful. Introduces everything that Augur is about in 2 minutes. And it's really made for everyone to understand, but that basically means if you're familiar with Ethereum, it's even easier for you to understand. So that was a great thing we did. And that was kind of one of the first things we did to introduce the project to the community. Again, you can only make one first impression and we want to make sure ours comment. The third thing is we build and maintain relationships with people like Ron, who's awesome enough to talk with us today about the history of prediction markets. Rob Hansen, Vitalik from Ethereum, he was a huge help in our development process, which really was great to have. And now that the project has really grown, like look how many people are here, it's kind of crazy. It's nice seeing him being recognized in the community. He's a great guy, and he's helped us out along with a lot of projects in the space out a lot. And Haman Shahab, who I can never pronounce his last name, so I'm sorry if I messed that up, but apologies to him, who knows a lot about the legal situation with prediction markets and blockchain tech. And again, if you're seeing this, I apologize if I butchered your last name. Everyone butchers mine too, so I got a lot of crap for it in high school. But consistent community engagement. Joey's brilliant at this. He every time someone asks a question, he gives a clear, sometimes technical if necessary, response. And everyone on the team at that point, not everyone, but almost everyone, was engaged. So if there was a question on our Ethereum, or at the time our Bitcoin, or our BTC, whatever the forum, they were there to answer it. And if it was something I could answer, I would. If it was something that really needed a developer's attention, they would. We didn't always get to it immediately, but we made sure that it was answered. Again, what this does is it's the best kind of marketing. That lose the video? Oh well, I don't need it that much anyways. I'm just gonna move so I can see it here. If anyone wants to see this, I'll make sure it's public too. All you're missing is what I'm reading off of, and you're kind of going with. Basically, that community engagement was something that gave everyone trust in what we were doing. They saw that we were interacting. So if they Google Augur, they're going to see us replying. That's old school customer engagement. And if anyone's interested, they see it too. So multiple people are served by this. And there's also a very good chance someone else has that question. And we simplified everything we could in our messaging. There's no reason marketing needs to be too technical. A lot of times with Ethereum projects, they're very much development centric. So the audience you have to remember for a lot of these is not all developers, it's other people in the community. So it's really important to be something that non-devs can understand. I think I might have figured out why it didn't work. Yeah, I didn't connect to Wi-Fi. Oh well. It was also some really recognized by the industry, and that's multiple industries. It's also in finance, we've gotten some really pleasant things said about us. The crypto industry, of course, and the fintech industry. It was named one of the 5 most exciting projects by Coinbase of last year. It was named a Breakthrough Tech finalist in last year's Exponential Finance Conference, and we were re-invited, which we just left that conference a couple hours ago, and Ethereum was talked about a lot this morning, especially among the blockchain speakers, so it was pretty cool because I think we were the only Ethereum project there. We were finalists, I should say, in the Max Marketing Awards for our crowd sale campaign, and I was actually able to go to the award ceremony in Atlanta, because that's where I'm from. We went up against Coca-Cola, Cricket Wireless, the Atlanta Hawks, and I think there's a few others that are off the top of my head, but the fact that I was the marketing team, and when I mean that, the devs really helped, and everyone else, but I was the only marketing employee, with Jeremy Gardner's help a lot with, I would say, the schmoozing part, because he was great at that, and getting people on our team, and he was really great at that, but it was awesome. It was so cool to be recognized for that first step, something so small to go up against Coca-Cola. Like, I was personally very proud of that, even if we didn't win. And we also recently did very well in the Benzinga FinTech Awards in the Proprietary Technology and API Awards, which I actually just found out from someone on the team that we were actually named the official runner-up, because none of us were able to make the awards ceremony. And I think they had something like over 300 entrants. So the past year has been pretty good to us, especially for technology that's not easily understood by those who are not in this field. The community was really important. Twitter, @Augur Project, and for me, @TonySwitch. I obviously tweet about Augur quite a bit. And Facebook, where our top channels are Augur. So if you're not a part of our Reddit community, it's our primary hub for information updates, interacting with the team. Just our Augur, join it. It's growing, and it's growing at a nice steady pace. And our Ethereum, obviously. We love that as well. It really helped us, especially when our subreddit wasn't as large as it is now. It was great to get messaging out and really talk about anything new that's happening. You know, the community's still in its infancy. Word of mouth is great. So it's one of those things where if someone's interested in maybe introducing you to a friend, the ways that I would personally recommend are sharing our How Augur Works video that I mentioned. Just go to our YouTube channel or type in How Augur Works. It'll show up. Start discussions in forums and communities. Say, have you heard this? But I always say if you're looking to not sound too much like you're selling your product, but only do this if you're interested. We're not asking you to do this, it's just if you care enough, it would be cool. And reach out to media outlets or participate in any Augur market in the beta. And the beta is simply at app.augur.net, if you couldn't hear me. And we really like getting as many markets on there created because it can be as interesting as possible, and it's always more fun to have just anything new. So if there's a bunch of markets about an election or about the economy or about whatever it may be, throwing one on who's going to win an Oscar or who's going to win a Grammy, that's always fun too. So please interact with us. And these are just some of the communities handles and things like that. And the one I didn't mention, or two I didn't mention, were our GitHub. So if you're a developer, you want to review the code, it's open source and it's also free. We love contributions. We also love anyone to check it out and share it. And our Slack, it's really been a growing community as well. It's open to the public. We make sure that we're easy to get a hold of. Of course, as we've grown, it's not as easy as it used to be, but we still try to answer things. And the development team and everyone's great, even as we've grown. So that's pretty much it for me, because I'm pretty sure Ron and Joey are going to talk a lot deeper into both prediction markets and Augur itself. So I'm going to hope this works for the rest of Ron and Joey's talk, and I'm going to hand this over to Ron.
Thanks, everybody. Thanks for coming out tonight, Michael and Melissa, for hosting the venue, and the Augur team and Tony for logistics. I'm just going to talk a little bit about InTrade. InTrade is a precursor to what this new era of prediction markets is in the context of the past, the present, and the future. And I want to say at the outset, there's some disclaimers, right? This is a very personal point of view. Some tongue-in-cheek with a little bit of sense of humor, please. The area that's most interesting to me, particularly with some of the troubles that InTrade had, is what's coming around the corner, what's next. And at the end of Joey's talk, we'll do a little bit of Ask Me Anything, so if there's some questions and comments you have, we can try to do a forum for that with some participation. From InTrade's perspective, if I can answer, I will, and if I can't answer, I'll just say I can't answer. Okay, so disclaimer number one, these are opinions, these are my opinions, and I've got bias. I've lived the space for about 15 years. I've never been more excited about this space than I am now. And the second disclaimer I have is that, there's just some things I can't talk about for legal reasons, so if you'll pardon me for that, I'd appreciate it. So, a quick definition, at least where I'm coming from, about prediction markets. I think they're financial style markets. I think that the context is always of an event that's going to resolve in the future. And I think that we use a pricing mechanism that's pretty intuitive, a percentage scale between 0 and 100, where the price indicates what the market's participants feel represents the probability of that event occurring. So there's a lot of things that could comprise a prediction market, and I certainly wouldn't exclude a betting market from that. It's predicting about whether the Mets can beat the Yankees or will beat the Yankees, and there's a price and percentages reflected in the marketplace. So when you've got money on the line, whatever the topic is, it seems to fit within the criteria of what a prediction market is. And that always leads down to, well, what if you talk about this content, and what about this content? And some of this crowd might be aware that DARPA got involved in prediction markets, and there were some headlines about terrorism markets and things like that. So there's certainly some ethical gray areas that prediction markets could encompass. And at the end of the day, some of the market content might be objectionable to a fair amount of the potential participants. But if you say to yourself at the end of the day, the value of prediction markets and the value to allow them to progress as they need to be has to be more of a benefit than some of the stuff that not everybody sees eye to eye on. So we're in an age of permissiveness and personal liberties and respect for other people's opinions. Some of these things aren't going to be perfect, but you just have to let them go. So, not going to spend too much about the past, but there's a long history of betting and gaming. One of the attempts at a sense of humor is maybe the history of betting started when people started praying, or maybe people started praying when people started betting. The history goes back. Strumpf did a really good paper about researching betting and gaming all the way back to 3000 BC. Evidence of, wall carvings and dice and chips and things like that. There's a very active history of betting in Italy and gaming as well. And betting and gaming are a little bit different. One involves just chance and one involves a skill of prediction. And then politics, betting, and certainly Ladbrokes in the 60s in the UK did complete advertising campaigns and focused on political betting and things like that. And then the United States has had political betting since the early 1900s. So plenty of betting and gaming history in a financial context or even in a gaming context. And sorry about this text-heavy slide, but I think we're all pretty aware of what the recent president of prediction markets could be. Kind of in the late 80s, early 90s with Iowa Electronic Markets. And for those that aren't aware, they were really the first to organize a prediction market in a financial context. They did it under the guise of an educational project, and I think it got a lot of press and attention at the time. And I like to say there's a new UI in the platform, so if you have academic interest in it, it's certainly worth checking out. And Betfair in the UK, which is a person-to-person betting exchange, not widely considered or spoken about in academic circles about what a betting exchange, a prediction market is. But as a betting exchange, to me, it certainly fits the criteria. And on that basis, Tony, thanks for the extra amplification, but Betfair is by far the largest prediction market there is. We're going to exclude the stock exchanges for the moment, but the most active markets, the most volume through the markets, and a very, very good matching engine. So Betfair really blew it open in the early 2000s. And just in an interesting way, and we'll touch on it a little bit later when Joey talks, Betfair was actually the combination of this idea of person-to-person prediction markets, but they started with a business called Flutter, where they actually purchased a business called Flutter, which was anybody describing a bet that they wanted to have with a friend, put it up on this platform that anybody could use and anybody could bet on. So interesting way that those dots get connected and comes back to full circle. 2008, Nate Silver and 538 started to become more popular and known about. Certainly Nate Silver's a money baller, so there's a nice connection between sports and prediction markets. And he's applied it to a lot of other things. If you look at 538, there's lots of different content about lots of different topics. You wouldn't expect that they fit within the criteria of polling or prediction markets, but he's really made that work well. So mathematicals and polls and crowd wisdom. Now, I will say that, in 2008 and then again in 2012, there was this kind of, well, at least in my mind, maybe not in Nate's mind, 538 versus InTrade kind of thing. And the context would be, you can't have a competition without someone to compete against. So 538 did an amazing job of adding a lot of media attention to it, and InTrade had, certainly its own following in 8 and 2012. But I would have appreciated Nate to say thanks for being there so that, I could have become famous. And then we've got Predictious, which is fairly recent. It's a Bitcoin-denominated person-to-person prediction market. And then most recently we have Predicted. Again, a personal opinion about Predicted. Very supportive of the project overall, but the fees are driving me crazy. It's just, 10% fee and 5% to withdraw your funds. The fees to me are so high that they exceed the potential margin of error in markets like this that the data becomes very difficult to trust. So new ideas and what's around the corner and how can we use the technology that we're here to talk about, Ethereum, to look and see what's next. And when we talk about new ideas, we have to talk about Ethereum, the big term being centralized versus decentralized. And I'm not going to say that centralization is bad. Like, Never before could you trade Apple stock, which is priced around $100, where the quote is a penny wide for $100,000 worth of risk. So the markets are pretty good. It's a centralized market. There are a number of central operators of these markets, but they're pretty good. But there are restrictions about these markets, and there are privileges given to these markets that when the technology permits some other ways, it might be better, it might be more democratic, it might be more open. And that's the area that Augur is really exploring. The way to become something for everyone, where you don't have to be part of the system where there's economic pressure, there's rents being paid by platform operators to be able to exist. Think about cable TV, think about telephone bandwidth back and forth, think about airlines. All these things existed and are now super, super profitable because they were given a lot of our public space. Our government endorsed these ideas, gave them more value than they really estimated those values to be, and founded very, very big businesses. Certainly in the exchange business, these were all non-profit or not-for-profit organizations that simply mutualized, became for-profit, and 500 people each made $10 million on the New York Mercantile Exchange. So some interesting quasi-government transfer to public. Decentralized is way better. That's my point of view. Where anybody has access, where it really fits within an American capitalism model, cream rising to the crop, and the ability to try new things and explore new things. Never been a better time to do that. So my attitude about it is, because the technology exists to be able to do this, we should do it. So I'm going to say that we're about to enter the golden age of prediction markets. And I say that previous efforts have been good, but it basically accomplished aggregating data, collecting data, finding ways to popularize this crowd wisdom as a model, but nobody's really done anything with the data yet. InTrade would have gotten weekly requests, can we have this data, I'm doing my thesis on this aspect of betting or gaming or prediction markets. But nobody's really done anything with that data yet. Nobody's taken the data from prediction markets and said, hey, can we use this as a real crystal ball? Can we decide, can we use this data to determine something in some topic somewhere about what might happen in the future? And that's the most exciting thing about what we're doing. It's like we've proven that there are ways to collect the data is pretty good, but now let's do something with it. So, and what I like about this format, the financial format, where dollars at risk really represents what the relevance of a market is, what people care about, what they're willing to put up a financial stake in. It's very objective. There's a number that represents price, represents value, it can change, and it has a finite resolution. So I think the last couple of years and the next couple of years, when we look back in 50 years from now, we'll say this was the beginning of the era that, and it's about Ethereum and decentralization and prediction markets. So I think we're at the right time and using the right technology. And this kind of participation, a couple hundred people here at this event, $160 million invested in projects like the DAO, that's participation. And whether it's a drop in the bucket or just the beginning of something big, this is happening, and we should be aware of it and hopefully figure out ways to use it. So I want to use the markets. We have proof that crowd wisdom is a valid way to collect data and think about data. Now let's start massaging the data. There's a number of ways to collect the data, from sports betting to prediction markets, new and old, to polling and data. And boy, oh boy, besides sports, this presidential election cycle is unbelievable for massaging data. I mean, it's just crazy prices. And then hopefully Joey will talk about some of the new mechanisms that we would use to allow more access to these markets, to allow a democratic and open venue for more people to participate. So using the markets is the best way to make them better, and the better they get, the bigger they get, the better they get, the bigger they get. So we can focus our attention on the learnings that we're getting from these markets and start to do something with the data. Now, there's going to be a lot of money made. Think about the value of what a crystal ball really is. Moving back to the future aside, you couldn't put a value on the utility of the crystal ball. And not that we have to get there, but just those steps getting there, and as we get further and further, those things are very valuable. So becoming better at predicting things And using tools like Augur or InTrade of old, or any new prediction market that comes up, is a great way to prove the validity of a possible crystal ball. So all these things, when you think about it, there are ways to transfer personal risk. We have risk in our lives. Is our mortgage the right price? Are going to be a hurricane in this place? Or the Mets going to beat the Yankees tonight? These are all risks. Some of the risks we want, some of the risks we don't want. Prediction markets give you a way to get rid of the risks you don't want to have and magnify the risks that you do want to have. So I'll let you read the text here, but this is a snippet from an email that I got from Joey a couple of years ago. And for me, and again, my personal perspective and my background with InTrade, it came at the right time for me. It was a difficult time. InTrade was, really on the ropes, and ultimately I wasn't able to save the company. But the correspondence from Joey and my thinking about it, it gave me a perspective about things. This was a light bulb for me. Despite our differences in age, we had a big common interest in the market space, and my filters became very different about what's possible in the space. So I'm now only thinking about Augur and Augur-like markets because I think it's the best format possible out there. So why waste time with some of the things that are compromises between where we are right now and where we could be? And we're thinking about things from a commercial perspective, and my specific interest is to think about things from a commercial perspective, what it means when anybody can trade anything, anytime, from anywhere. And that's an incredibly powerful privilege to have, especially in the age where we have a lot of government restrictions about a lot of things. So there's lots of things that can work on top of Augur. If this were Shark Tank, I might be pitching a couple of ideas about all the things that we're going to do to make money on it. But we're given a tool right now. The tool is Augur, and the ability to do things on top of that, to make prediction markets, never did better. And the biggest opportunity when we talk about how good markets can be, they're as good as the amount of data and the participation that we get from all the different access points. So if we are able to connect all these disparate liquidity pools, whether it's the soccer fans in China with the soccer fans in the UK, or the ability for 1 million people to trade $20 worth of Apple risk instead of having to buy 100 shares at once, that's all very important data. So my closing opinions, I talked about this being the emergence of the golden age. I think it's an opportunity to do some social good with the data that we get. Let's do something meaningful with the data. Let's save some lives. Let's help predict the future. Consistent with what's going on in blockchain, with Ethereum, it's a match, right? Blockchain is great for monitoring and transferring physical assets or a representation of a physical asset. But what Ethereum does, it actually adds that carrier, gives the best ability to transfer risk. So if we say all the risk you want and none of the risk you don't want, that is what's now possible. So these structures, like Bitcoin, like Ethereum, like Augur's crowd sale, like the recent DAO, these are new structures, but they're here to stay. I'm not sure that we've figured out the perfect one yet. I think that there's a lot of growth, and certainly off of the back of a very titillating amount of money, 160-something million in the DAO, it's going to drive innovation, interest, and research. That's a big pile of money. This slide's out of order, so we'll do an AMA after Joey talks and we can get some questions. And I want to just leave you with this thought. The importance of prediction markets, where they were and where they're going, how could it be bad to give individuals the ability to transfer away the risks they don't want and take bigger risks than the risks they do want? And that's what we're talking about. So thanks very much.
There was actually one thing I forgot because the screen went out and I got flustered for a second. Happens. We're actually, a few people asked about the Augur shirts. We did bring a few to give away. Unfortunately, not that many would fit on our carry-ons. So what we're doing is, if anyone wants to tweet about this or anything to do with Augur, just use the hashtag Augur, and any of the tweets that we like the most, we'll get a shirt. We brought a few in a few different sizes, but they might be limited, so keep that in mind. And if I've already seen your tweet, you will be in contention too, but I'll be following that hashtag. And I'm just going to switch this presentation and hand it back over to Joey.
Yeah, so first I just want to say thanks for having us. So we're going to cover 3 things in my presentation. Basically, what is Augur, which Ron mostly covered, so I just kept that really short. How does it work, and why it's awesome. So Augur is a prediction market platform. So most prediction markets, they're basically a centralized service where basically you cannot create a market on whatever you want. Augur instead is a platform where anyone can go to it to create a market. And that's a mock-up of what the new UI is going to kind of look like. So how Augur works, there's 3 main parts to it. There's creating markets, trading, and reporting and resolving markets. So I'm going to go over creation first. I'm actually just going to walk you through the current UI. So you can create a market that's like binary, yes or no. You can create multiple choice, so it's like, well, X, Y, or Z. And you can create numerical markets. So it's like, what will the share price of Apple be in the end of next quarter? You can propose a question, choose possible answers. This is an example of the categorical market. And you can choose the end date. So that's like, you want to choose that sometime after the event happens. So for the election, you want to choose it like a few days after the election, in case there's something like the 2000 election. Then you can choose a source that people can kind of look at to resolve it. If you're making an obscure event, it's probably a good idea to link to somewhere that you know the resolution data will be. Something like a political election, you don't really need to link anything. You can add tags. So the way this is going to kind of work is Augur is not a centralized platform. There's no like curation built in. If you go to a traditional site to trade, to work bet, they put everything on the left-hand side with categories you can choose and kind of narrow it down. On Augur, it's kind of limited, so basically the crowd's going to do that. So the most popular markets, the ones that have the most volume, will kind of pop up naturally, and you'll be able to kind of sort them by the tags. Then you can set a trading fee. Basically, the person who creates the market is half the fee for any trades to go through it, and it's to have regular half over a minute. And you can set initial liquidity. In the new version, you'll actually be able to set a schedule of initial orders. So you can say, I'm willing to sell this many shares at 50 cents a share, I'm willing to buy this many shares at 60 cents a share, so on. Then it'll ask you to confirm, and you submit it. And then after that, you basically create a prediction market. So the next aspect is trading. When we initially did this, we had a really complicated system called a market scoring rule. And basically what we found out is in practice for small outcome markets, so that means like what will the share price of Apple be, will Donald Trump win the presidential election, things like that. An order book is actually much more comfortable for people to use, and it's a lot easier to understand, and it basically allows you to set the risk. Not really better, but in a more intuitive way. So you can do a few things. You can go long, you can go short, just as you would in normal trading. The only difference is there's bounds on Augur. So if you buy Apple, let's do short, because it's more fun example. If you short something, your loss is technically infinite in regular financial markets. You short Apple at $100, Apple could go to $1 million. But with Augur, it's bounded. And the reason is on Ethereum, we make it so you have to put your worst case loss, basically the maximum amount of money that you could lose, up, cut. And that's so everything's fully collateralized. So there's no margin built in at the core. Someone can add something on top around it to add margin, but the core protocol doesn't involve that. Basically, you can place orders on the book, you can take orders off the book. So when you go to a traditional exchange, you're basically usually taking orders off the book, unless it's like a illiquid market or you're a whale. Makers pay lower fees. And share issuance is kind of interesting. So if you go to a traditional financial market, basically, if you're buying and selling shares of Apple, Apple as a company already exists. They already have shares. Apple may issue more shares at some point. Kind of doubt it. Apple may get acquired, or they may go bankrupt. Neither of those are likely. So you're basically just trading Apple and buying it from other people. With prediction markets, you're doing it with new events. So it's like stuff that doesn't exist already. So the shares kind of have to be issued somehow. So to give you an example, if we were back to the Trump first Hillary example, you need to issue shares to Trump and issue shares to Hillary. Otherwise they don't exist. So the way to do that is using something called complete sets. It's actually an idea that Ron proposed for a paper that Princeton wrote about prediction markets. The idea is basically a complete set is worth the range of the market. So in the case of the Trump or Hillary market, the range would be 1, because their maximum profit is 1. So if you bought 10 plate sets, you get issued 10 shares of Trump, 10 shares of Hillary, and it would cost you 10 Ether or Bitcoin or dollars or whatever. Now, the interesting thing is you don't really have to expose this to the user. I'm just telling you this because I wanted to explain how it actually worked. But basically you can set it up so the UI will automatically give the user the best price at all times. But if someone who would want to use something like this is a market maker, so if I have $100,000 and I'm making a market, and I want to kick it off, that's when I use complete sets. The final thing is reporting. So if you, this is kind of the same with Apple examples, there's no resolution typically in a financial market except for acquisitions and bankruptcies. But with Augur, you're trading on real events. So after the election, you kind of need to get the information of who won and resolve the market accordingly. So if Trump won, for instance, his shares would be worth 1 share. So if you want Ether, $1, 1 Bitcoin, whatever, you need a way to kind of communicate that to the chain. And so anyone who owns shares of Trump would basically get the $1 per share that they own. So the way we do this is, first of all, the ways I kind of thought of doing it initially. Initially, it makes sense to just use an API. So this is like basically you get the election results from ESPN or get them from 538. The problem with this is Ethereum doesn't have internet access, so you cannot like ping an API from Ethereum. So the other option is, well, we'll just point some random person to ping the API, or since I'm Joey, I'm trustworthy, just trust me and I'll resolve the market for you. That kind of goes against the kind of ethos of the space, and it also adds a central point of failure. So if you have a central point of failure, in my opinion, you should just make a centralized website. And because if you already have central point of failure, there's not a whole lot of sense in adding this decentralized infrastructure around it if you have one point that someone can take down. So what we do is we have a system called reporting. Basically, we have a ton of people in our system who are called reporters. Each of them has a thing called reputation. Basically, the way it works is it's like a bond. In the not A+++ means it's not like reputation on eBay or Amazon, where this person's a trustworthy person, therefore they're have more money. It's more like I'm telling the truth. I'm so confident I'm telling the truth. I'm willing to lose all this money if I don't tell the truth. It's kind of how reputation works. So basically, what happens is there's all the markets have expired in the past 2 months are in reporting periods. So every 2 months there's a reporting period. And the way this kind of works is in the first half, so the first 30 days, you basically commit to your report. So basically say, I'm going to report on these things. This is a half of my reports. And that's to prevent a kind of collusion mechanism where you can if you reveal your report, someone can slay your reputation. So the idea is like that if I wanted to collude with, say, him, and I wanted to basically tell him how I reported so he'd know that I'm actually going to collude with him. I give him 2 pieces of information. I give him my report value. So I might say Trump won, he actually did. And I give him a random number. All he has to do is take those, submit them to the network. There'll be a UI for that. Just because I have to copy and paste them. And he can steal all my reputation because it's clear that I'm a cheater. The second thing that happens in the first half is you get penalized for reporting incorrectly or not enough in previous periods. So it's basically kind of like opposite cycles. In the second half of the reporting period, you will reveal your report. So in this part, you reveal the random number and your report. At this point, nobody can steal your data because you're revealing it to the network. And that's when the votes are actually tallied and counted and the markets are solved. Basically using what we submitted. So if 70% of the people in here said Trump won, 30% said Hillary won, and if Trump actually did in fact win, those people would get part of the reputation from those that said Hillary won. And the other thing that happens in the second half is you get trading fees. So I mentioned earlier that half the fees go to the people who created the market. The other half go to the people who are basically resolving the market, or the reporters. You also get a portion of the rep that people who didn't report or lied in the previous period. So it's very interesting because it's a finite amount of rep and it's redistributed according to basically how accurately you report. A little comparison chart between kind of how outcome resolution works on InTrade and how it works on Augur. Basically recap, the idea is basically what I just said. So there's 2 backstops. The first thing with a system like this is to say, okay, well, what if we just get a few people to collude, know each other or something? Since we're all in this room, I don't have to reveal myself, I can just tell you how I voted. You might not be able to trust me, but you won't beat me up afterwards if I cheated, you know? So there's two backstops. One is where everyone reports on you in an event. So the way that works is some person who detects that there was fraud. Let's say in the 2012 election, they said that Mitt Romney won. They put up a bond, so basically clean up money. And the reporters, all of them, we report on this event. If they get the same answer as before you put up a bond, the guy loses the bond because it's basically a false bond. He's basically just wasting the system's time. If they get a different answer, he actually gets rewarded because he basically found out that there was a failed consensus in the system. Now this does have one kind of flaw with it, which is if someone controls over half of the reputation in the system, basically then they can kind of falsify the outcomes. So the final backstop is working the network. So in this case, one set of reputation thinks Romney won, one set of reputation thinks Obama won. And the idea is, since reputation is basically tied to the future value of trading fees in the system should value the reputation, not the system, the market itself, so like markets outside of Augur, should value the reputation that reflects reality higher. Because you basically know that the stuff that says Romney won is basically, a BS, it's a lie. And no sane market trader is going to create a market on that fork. Because if they did, their market's going to get resolved for all their customers who don't eat. So this is kind of like a common question people ask, like, well, if all this stuff is happening, how can I buy and sell rep? And so the way we kind of solve this is you can make rep dormant. So in this case, you don't have to report. You also don't get any trading fees since you're not doing any work. You don't get any of the redistributions. And we really wanted it so if the network is under attack, people are incentivized to actually support it, as opposed to just like sitting there and keeping the rep dormant. And so what happens is if the network's under attack, you don't activate your rep and report, you'll actually lose some of your rep then as well. So the things that like make Augur unique or interesting is it has global liquidity. We'll get to in a minute. Markets on anything, anywhere, as Ron said. It's cheap. I can use it to trade the future, and it's really quick trading actually. So liquidity kind of looks somewhat like this today. You have big pools in the US, big pools in the EU, big amount in Asia. So Augur, we want it to kind of look like this everywhere. So anyone in any country, anywhere, can kind of trade on Augur. So they can basically, anyone anywhere can access financial markets and do it in a much cheaper way. Another interesting thing is creating new financial markets and contracts is very hard. As someone in our Slack a few months ago was saying that, someone created this interesting derivative contract that was based off of interest rates, and it's basically a contract that kind of all the people on Wall Street wanted to use, but since it was only available OTC or over the counter, which basically means there are kind of places that will come match you for OTC trades, but the way it kind of works is you call up someone and you say, hey, we want to do a trade. These are like big institutions, and if they want to accept your price, they'll do it. The spreads aren't super narrow, depending on how niche the contract is. And so basically these things contract never took off because it was only available on OTC. There was no exchange where everyone could go and use it, even though almost everyone wanted to be able to trade this sort of asset. So with Augur, anyone can kind of create an asset in a few clicks, as opposed to hiring someone, pay them a few $1 million to set up your new asset. This happens with like mutual funds and ETFs all the time. People will create a new fund that has specific parameters for it, certain assets that it includes, they'll pay millions of dollars to do it. You can make a synthetic one on Augur in like 10 minutes. So the other thing is cost. So on Augur, anticipated fees will be around 1% to 2% initially. Long term, they can get even lower. Basically, the only limit is like making your money back as a market trader and paying the reporters so it actually stays secure. If you're trading on something like Betfair, it's around 10%. If you're on 500.com, which is what the Chinese typically bet, it's around 20%. We can't predict anything. It's interesting because if you look at the financial markets in China, they don't have access to US markets unless you're a big institution or you're really wealthy. So something like Augur allows them to basically access US capital markets. Sure, they don't get dividends, but they get the profit and loss or anything else. So unless you're a dividend investor, Augur is actually a pretty good place to access P&L. One of the kind of long-term things I kind of like to talk about with Augur is like, imagine if you could ask Siri like what the odds are in the future of that happening. She might be able to do like sporting odds. I'm not sure sporting odds. Like if you ask her something like, what are the odds Russia will invade Ukraine in the next 5 years? She's going to lead you to a bunch of articles that are really long that you don't really want to read. All you want is an accurate estimate. So the technology to do all this is here today, and it's even like you could ask an expert, but the answers, historically, what the research shows that they actually give worse estimates than prediction markets do. So we have all the technology here to do this today. We have prediction markets, we have blockchain tech to build them on. With Augur, we have decentralized oracle systems to kind of resolve the markets, and we just integrated in front outlet to actually be on Siri. So the other thing is settlement times. So basically, if you want to make a trade, sometimes you can call your broker and pay like $40 and get same-day settlement, but the standard is 3 days. So if I buy Apple, it takes 3 days for me to actually own the shares, which means I can't do things like depending on the broker. Sometimes I can't sell the shares after I bought them, or I can't withdraw the money after selling them until 3 days. On Augur, it's around 30 seconds, based off Ethereum a lot of times, so it's 8,000 times faster, which is kind of cool, and you can get it even faster once the Ethereum switches to proof of stake, which have block times in a few seconds. And with payment channels, this is where you're like doing the transactions kind of off-chain in a sort of trustless way, and then reconciling them on-chain, you can have basically instant transfers. Let's see. So the next thing is kind of miscellaneous, random cool stuff about Augur. One is there's no naked shorting, so you can't sell an asset that you don't own. There's no custody funds. All the money is stored on the chain. There's no bank to freeze. There's no person to trust who's holding the money. There's no high-frequency trading. That's just kind of bugging in the future because Ethereum block times for 15 seconds. There's no leverage or margin at the core. So like a lot of people worry about the financial crisis in 2008 because all the leverage basically is just one of the huge issues. At the root of Augur, it's not possible. You can build something around it where you have leverage, but you probably have to end up trusting that entity at some point in the process. All the trades are processed automatically, so no one processes the trades. If you enter a trade, you know it's going to go through. You know that you're not going to lose your money, that you're not going to get the shares, you know you're going to get them. And the final, most important one is the markets are resolved in a decentralized fashion. So unless you have a distributed oracle, you kind of have a central planet failure issue, and Augur kind of solves that. And feel free to ask a bunch of questions, because the Q&A is the most fun.
I have a question on reporting. So, can reporters report on multiple events during the reporting period, and how do you solve for double spending?
Yeah, so basically you can report on multiple things in a period, and in fact you're actually selected to, so you're randomly selected to report on things. You don't get to choose, it's like a random number generator basically. So you can report on multiple things. The second question is like, how do you prevent double spend rep? It's like one thing you really don't want is someone to report on something, then send their rep away, or someone to like get extra rep based off spending it at a certain point in time in the system. Basically the thing is, during the reporting process, so after you've revealed your vote, you cannot send your rep until the start of the next period, which basically means if your rep is active, you cannot really trade it until the start of the next one, which is kind of unfortunate, but it's also an integral part of the system. If you took that away, you could basically double spend rep, and you mess everything up from redistributions to fee collection to how markets were resolved in general. The nice thing is dormant rep can be traded at any time.
So with scale, is there a risk to not have enough rep to support the platform?
So I kind of think of this in a kind of free market sense as well. So the idea is like, at scale, let's say there's like 100,000 markets and not really need to be resolved. For one, that'd be great because we probably have like most of the financial traffic in the world. For two, the way it will kind of work is the system will basically, it'll scale. It scales in a few ways. So one, people are randomly selected to report, so that helps. And the other is, as the amount of events increases, your reporting burden is going to increase. So like, in theory, let's say there's 100,000, you were reporting 100 hours a month or something like that. For a lot of people, that's going to be way too much, and your rep's going to be worth a ton, so it's going to be a ton of trading fees. So people would basically sell to that on market and sell to people who new people come into the system. Even that would happen. The other possibility is that everyone just reports 100 hours. I think that's unlikely. And the third possibility is that they don't report, in which case they lose reputation and gets redistributed.
So this is maybe for Ron first. Maybe talk about the regulatory challenges you have in trade and how you see Augur breaking through that. Even so, I understand that government can't shut down the Ethereum and Augur on the Ethereum network, but what are some of the challenges you still face with Augur?
Right, so the regulatory issues from InTrade stemmed around the permissible product set that InTrade was allowed to trade. The quick backstory is that in 2005, InTrade reached an agreement with the CFTC not to list certain products, and this was the beginning of some of the redefinitions of financial markets, swap execution facilities, designated contract markets, and things like that. And I don't know if anybody's had the privilege or delight to look through the 1,000 or so pages of Dodd-Frank, but it's an absolute nightmare. At the end of the day, these event markets that were listed on InTrade were construed by the CFTC to be financial products and therefore under the remit of the CFTC. And even though they were described as event futures, they were also described as commodity options. And on that basis, the CFTC took objection to the platform and the products that were listed. So having reached an agreement in 2005 with the CFTC, in 2011, some of these products were listed again, even though the definitions and the market terms and structures were a little bit different, and the CFTC put the hammer down. Just some more backstory, a little bit weird circumstances happened. The CEO passed away climbing Mount Everest. The market went into a tailspin, and there was a real management vacuum. And at that point, as a major shareholder of the company, I came back to try to rescue things, but the die was already cast, and other things were happening. So that was why InTrade had the difficulties it had. It wasn't from politics, which is where InTrade made most of its reputation, certainly in 8 and 12. It was related to things that InTrade didn't have to do. So if you wanted to start a prediction market right now yourself and you wanted to trade politics in the United States, you wouldn't necessarily run afoul of the CFTC, but you might have betting and gaming aspects. Now, the big difference between where InTrade was and where Augur is going is every part of the trading ecosystem is decentralized. That's really important. The missing ingredient was the reporting system. As I said in the talk, centralization isn't bad. It certainly works for the exchanges. It's very efficient to trade, but not everybody has access to it and things like that. So the key thing is to connect these liquidity pools to get rid of the gerrymandering, the artificial restrictions about this community or this product or this geography to trade. And Augur accomplishes that because it's just self-executing code. The code exists, anybody can copy it, anybody can use it, anybody can contribute to it, and there's no central operator that is responsible for any part of the code in a way that regulators can restrict content, access, participation. So, Singapore is trying to restrict Bitcoin. Russians had an announcement that says, we're going to throw Bitcoin users in jail and stuff like that. It's hard to do. Maybe they'll make some test cases about things, but this code is just out there. So just like the way Bitcoin works and it works by itself, this is the way Augur is specifically designed. Is that responsive? Sure.
So just to clarify, your Augur offers a means by which U.S. domiciled persons can have access to U.S. equity markets without falling under broker-dealer, registered representative.
So the software is what you want to use it for. The software is there. It's a very open standard for creating a market. It's a very open standard for participating in a market. And the reporting aspect is just someone verifying the outcome of the market. So ESPN verifies the outcome of markets that are considered to be illegal, which is betting on sports, for example, in the United States, every day. That's their business. In fact, they started quoting the lines a couple of years ago as well. So there's a more than, unofficial acknowledgement that betting exists. But reporting on the outcome events is not illegal, that's where the newspaper is. Creating a market, depending upon how it's used, and trading in a market, depending upon the breach of your personal liberties and what you as a citizen expect. It's kind of a new territory that's going to be exploited, but the platform itself is meant to specifically be just software.
Thank you.
So you're going first.
Thank
Yeah,
you. You mentioned earlier that in the interface, the more popular, more frequently traded markets will pop up, and you can scroll down, you can sort them. Is there any information there about exactly how much volume is going through in that market? Is there any way for the user to see historically how prices have moved over time? And secondly, can you give us a sense of what the overall volume is on the system right now and how that's changed over time? Yeah, so basically, yes, you can see price history. With the new loan order system that's going to come out fairly soon, you'll be able to see order depth, full book, all that stuff. It tells you exactly how much volume each market has. Right now, there's not a thing with this as like the total value in the system, but it's something that's like on the to-do list that we want to add. This kind of cool feature that people want to know. And I don't know that off the top of my head, because the only thing to point out is the system is in beta right now, so it's testing on play money. So any volume figure I give you would just be made up, because like you go into it, you get free money from a faucet and trade with it. So like I can come to the volume to 100 billion, and it wouldn't mean anything at this point. Right. Well, one of the points that Ron made was that as more people come to participate in the market, more people will want to come to participate in the market, and if you can advertise the amount of volumes that you're doing, they're pretty impressive. I think that'll actually help you to bring more users to the market. Yeah, I definitely agree with that. Liquidity against liquidity. Correct.
Do you have a cap as to how much capital could be invested?
In any given market?
Yes.
Only how depth the order book is, how deep the order book is, so no.
And maybe I missed this, but how do you guys make money, and what's the question? What's the structure? What's the structure behind this so your token holders get something? And are there any concerns from the compliance and regulatory angle from money that's being made out of the market being settled flowing back to those people?
Yeah, so basically, the company is building Augur as a nonprofit. We did raise around $5 million in a crowdfunding campaign where we basically sold the reputation tokens, which we used to report. Someday we probably have to build a for-profit around it, but we don't know exactly how we're going to do that yet. So that's kind of where that is. That's where we're on, right? From a regulatory standpoint, basically, it depends. Everything depends on the jurisdiction and what exactly you're doing. Like depending on the jurisdiction, for instance, trading a specific market could be legal or could be illegal, or it could be illegal to be licensed, etc. For reporting, we think that it falls under basically essentially the same free speech that APIs like ESPN fall under, or Google Finance or anything like that. And that's kind of how people I've talked to, like regulators view it at this point. That's all I can say on that.
In the event that you do have that situation where you need to do a fork because the network is under attack, and you need to basically tell people or tell holders, take your things out of dormant state and put it back in. How do you message them?
So let's see. So there are two ways to do that. One's like something like Bitcoin does. You have a huge banner at the top of the UI that says it's all in red and it has text activities one or two times. Beyond that. You really kind of have to communicate it the same way we communicate everything else, which is post on Facebook, post on Twitter, post on Reddit, post on our email list, tell every exchange that you describe about it. It's really kind of something that anyone who's actually using it will see it right on the UI. We want to give you instructions like what to do. We want to make it very simple, so it's like the network forked. Did Trump win or did Hillary win, which actually happened, and you can choose which fork you want to be in. It's kind of how it will work.
Does the system expose the positions that an individual has taken historically?
Yeah, so it does. It would be kind of messy to like look up like what positions like given address had if it wasn't yours. The UI just doesn't really expose that right now. It's doable. It's just like it's like down the road. But yeah, you get all of your past positions and anyone else's really if you knew their address.
Is the UI decentralized?
Yes, so the way UI works is kind of interesting. So it's basically a JavaScript file that runs client-side in your browser. What it does is it does a few things. So one, you can get it anywhere you can have a file. So like you can get it on BitTorrent, you can get it on IPFS, you can get it on from Augur.net, etc. The other thing is it's all on client-side except for a few things. One, it has to connect to the Ethereum network somehow. So right now we connect using like it's API, I'm trying to remember, ether.cam. It's the API we use to connect to their Ethereum nodes. We're working on a thing where anyone in the community can spin up a node to kind of help provide like redundancy in case Ether got shut down or went down. Worst case scenario, you have to run your own node and it connects to that automatically client side.
I'm curious about the recent decision that you guys made to do away with the LMSR and go to an order book and what that means for the network and so forth.
Yeah, so basically, long term is the plan to have an order book for like large outcome markets. Basically, what we kind of found out is in the beta, trading on the LMSR, even though it's liquidity sensitive. I'll just give you an example to kind of explain the problems we run into. There's two main problems in Augur switch. One is that like there was like a few $1 million quote unquote traded on the election market in beta. Bernie Sanders was like 25%. I spent $1,000 and came up with 35%. So there's a lot of volatility. Now there's ways you can kind of get around that and you kind of fix that issue. So that's not the thing that kind of killed it. The thing that killed it is on Ethereum to do limit orders with the LMSR. In the early days of the market, the LMSR is what actually issues the shares. So instead of these sets, you're issuing them with the MSR. So you would trade back and forth, say like day one of the market, there's maybe $50 in it. And you say, I want that $1,000 on yes, and I say, well, I'll take the other side of that, 5,000. So then to do that, we would think, well, just process pretty instantly, maybe 1 or 2 blocks and it's done. But in fact, the shares aren't issued yet. So that means you have to do a ton of trades back and forth to issue the shares. What ends up happening is on like, a central server where you're using like SQL or something, works fine, please like a second or two. On Ethereum though, blocks are every 15 seconds, so it's going to take hours to do a trade for one, and two, it's going to cost you a lot of gas. So much so that it might end up costing you more gas than the actual trade value. That's the reason we switched.
Right, let me just add one quick thing about that. So there's no reason that a market participant couldn't connect to the system and use their own algorithm, whether it's a liquidity scoring market rule or any algorithm they design. It's basically just a schedule of orders, right? That's what the automatic market maker is. It says, okay, the fair price is 50, so I'm going to put these various orders in, and as I make sequential trades, then I'm going to adjust my risk and adjust my prices. So there's no reason that anybody can't make a schedule of orders using that or a system of their own design. But the order book itself, it just allows immediate contributions to the order book, adding liquidity to the market right away, and it takes out almost that requirement to go through one specialist, using all stock exchange terms, and instead just contribute right to the order book. But if you have the technical ability to build an algorithm and connect to the system, you can run an algorithm if you want, any algorithm.
From a marketing perspective, do you only collect those revenues, the revenue, 50% of the revenues for providing liquidity if you are the creator of the market, or is it anybody that is providing liquidity on the market?
So we had a huge amount of discussion on this in Slack. The kind of compromise we came to was 25% goes to the person who created the market. What they're having to put out is having to put an outlay of money to basically pay the minimum amount of reporters to resolve the market. That's a cost to them. So they get 25% of the fees for that. The other 25% are used to subsidize makers. So as a market trader, you can basically say, I want makers to have 0% fees, I want takers to pay 150%. Or you can say I want makers to pay 50%, and I want takers to pay 100%. It's just me, the exact fee. And you can go anywhere in between that spectrum and So that's kind of how it works at this point.
Right, so the concept when you create a market, you want to sponsor that market to earn fees on it so that you want it to be a viable market. And a maker fee, when you put an order on the book, theoretically you're taking more risk than someone who's taking an order from the book. So therefore, as a sponsor of the market, you don't want to waste your money in creating it. You want other people to trade it so you can earn fees. You have to decide how you're going to allocate the rest of those fees to be collected by the participants. So it's a pretty good incentive system to get people to provide liquidity, and therefore it grows the network.
Have you seen a lot of duplicate markets with people doing different incentive schemes?
So
Does that?
that's a concern everyone has. In the beta, since it's not real money, it hasn't really popped up. I'm not sure how much it will pop up in real version. So like, if you make a market as like a 0.5% fee or something, and it gets really popular, it's probably likely to stay very, very popular unless someone else comes along and both A, makes a market with a lower fee, and B, sees it with a ton of liquidity. If you have an election market with $10 million in volume and the fee's like 0.5%, someone cuts you down to 0.3% and puts it up with $10,000 of initial liquidity, it's probably not going to take off. There's also the interesting aspect of like arbitrage between markets and Augur, which I'm sure some traders take advantage. That's kind of where it is right now. Haven't seen a lot of it, but we might eventually learn. It's you.
So I described this project to a lot, maybe all of my non-technical friends, and they all absolutely love it. But they're the type of user who would want to like bet $50 on the election, and they know absolutely nothing about any of the rest of this and have no desire to. Have you tested your next iteration of your user interface with very non-technical people who might fall into this category and gotten feedback from them about how easy it is?
Yeah, so the main complaint we've gotten from people is they don't like how it takes time to process the trade, which is it's interesting because on Wall Street it's 3 days, but they just make you think that it processed instantly. Now the problem with Augur doing that is you could do that, but the problem is if someone exits the page, there's a chance that it might not go through. So this person thinks they put $50 down and it didn't go through.
Because it's a client side.
Right, because it's client side. So the way we've kind of been installing that in the UI is we made the transaction interface a bit less obnoxious. So before we pop with the same bottom of the UI and be like, your transaction's pending, it'd say it's committing, it'd say all this technical stuff that nobody cares about. Now it's like a tab on the top right. You click on it, it tells you how many transactions are pending, it tells you what they're basically doing at a high level. It's like this transaction is buying 10 shares, 50 cents a share, and it's costing you $5, 5 Ether. And people seem to like that a lot better.
I just want to add on a little bit about the comment. There's almost as much adoption concern about getting the currency into the system to begin with, and it's really just about using digital currencies and Bitcoin and Ethereum and stuff like that as it is to use a trading site. When the trading site is done and the order book and the entire infrastructure from creating a market to trading a market, it's going to look like Charles Schwab or Ameritrade or something like that. So to the extent that passes the MOM test right now, as long as they can use a currency to fund an account and be able to participate, the trading side of things won't be the hiccup.
And I have the rare random marketing interjection here. Notice so far we really focused on the cryptocurrency community, and there's a reason for that, and that's because of what it'll be using when we launch. As it goes along in the future, believe me, the focus will change to include a wider array of people. We just know right now where our bread is buttered at, so that's a little interjection too. So there's a lot as far as non-technical users, because I would consider myself the same. I know a little bit of the background, and obviously to sell it I need to know a little bit, even more than that, but when it comes to passing the MOM test, I actually showed my mom this, and it's very close. It comes with the crypto. Once the crypto comes in, it's a wallet. Okay, this is the issue. So we realize that's something, and there's multiple solutions that we actually all talked about, and we're going to see which one works best. So it's definitely for down the line.
I just wanted to say real quick that Coinbase now lets you buy Ether, so people could just link a bank account, buy Ether, and then have some client-side magic link your Coinbase account to a transaction or something.
Yeah, that's definitely true. So that really helps a lot with the barrier of bank accounts and getting Ether. the one barrier, the one huge barrier that still remains is what's Ether. Most people want to trade in dollars. And so I think stablecoins is the way to go.
My question though was, will the client be pruning certain transactions or predictions, or will it be completely unfiltered?
So there are filters for it. You can basically filter right now. You can filter by volume, you can filter by creation date, alphabetical.
Oh, but I mean more specifically like a blacklist.
Oh, like
pruning, like you know, fat people hate. We're going to ban that from our network.
So there's no pruning of it because basically we don't want to control the UI. We want to contribute code to it, but we don't want to be like overseers of the UI, censoring certain stuff. The system does have a way to kind of censor stuff. As to reporters, they can report that something is unethical. So if you have like some really egregious market, the reporter might report that as unethical. But that's the only kind of mechanism for
How does that get enforced in the network if I report this as unethical?
So it doesn't get forced on it. Like over half of the reporters who report on that have to say it's unethical. And you can actually use the forking system in the backstops with ethicality as well. So like you and your friends just say, well, this market's unethical, and there's like 10 people reporting on it. You can actually use the backstops to prevent manipulation there as well.
Thanks. Two questions. First, is your go live October, November, and then secondarily, there was the announcement with Airbits yesterday. If you could explain a little bit about that.
Yeah, so the go live thing is a really difficult question. So for one, because I work on the back end, so I work on all the smart contracts. Good news is I can tell you those are almost done. There's basically two main features left. One is allowing you to use any currency on Ethereum besides just Ether. The other is kind of the dormant wrap stuff I talked about, which is basically just some if-then statements, or if-else. So that's pretty quick. So security audits are going to start in July. Trying to have like 4 or 5 people audit the code, make sure it does what we think it does. And then after that, it's very easy. One, I've never went through a security audit process before, so I don't know how long it takes. And like 2, stuff can pop up in those that you didn't expect. So that's, just being honest, I don't really know how long the audits will take. I don't think it'll take too long, but who knows. The other thing is about launch is, the thing kind of holding us up a bit right now is the UI itself. It's actually really hard to make a distributed UI. Not distributed, but a decentralized UI. Because basically, you're making a UI, traditionally you just ping a server, get the data, and set some stuff on the server, send it to the client, back and forth, and it's pretty easy. Augur, we don't really have any of that. We have Ethereum nodes, but there's a lot of data that you need to get on from Ethereum to Augur, so it's kind of a complexity there. It takes a while to solve those problems. About the Airbits thing, what that's solving is basically, right now if you make an account on Augur, you basically get a wallet file, it's stored on your browser, so there's two really huge problems with this. One is if you don't download it and save it, if you delete your cache, the wallet goes away, so you just lost your money. 2 is that to use it on a different computer, you have to basically upload it to that new computer. And then 3 is like, unless you are really comfortable managing your own private keys, it's kind of messy and like someone can hack your computer, just take your wallet. Of course, it's encrypted, but it's still kind of a big risk. So what Airbits allows is basically a kind of a hosted way to do that. So it's not like just store on an AWS server like Blockchain and Info does. It's actually more interesting. So they store it using Git on multiple servers, and this is kind of interesting cryptographic scheme they have where you can't actually like let's say I wanted to steal your wallet and you had a ton of money. To basically fetch your wallet from Airbits, I need to know a secret that you have that I don't. So I can't actually get it from Git, which is kind of interesting. It's different from like Blockchain and Info, I can just dump their DB if I have access to the AWS server. Long story short, the idea is to make it so you can go on one computer, use Augur, go to the next one, log in, and it just works.
So the Airbits wallet would have ethers in it as well, potentially?
Yes, you can use Ether in it, rep, trades, your shares on Augur, anything like that.
And the last question, are you going to wait to POS with Casper next year to do all this stuff, or are you going to try and do it with as it is today and then switch over when that happens?
So we're going to try to do it as it is today. The big issue is like, I don't think they can keep all the data with POS. They said they were going to, but they kind of changed their mind. Worst case scenario, if they do, we basically have to 90 markets over, which is pain. it costs a lot of money, it might break the reporter's hour, but it's, obviously worth doing. That's 2 cents on that.
Can you talk a little bit about what kind of financial derivatives you can synthesize with the prediction market, and whether there are like inherent limitations to what you can model?
So basically, you can model anything. I mean, you cop out like silly answers like, well, you can make binary markets, therefore you can make any state of the universe in a prediction market. It's technically true. But you can make binary markets, yes or no. You can make categorical, so that's like, will it be one of these things? You can make scalar markets. With those 3 things, you also have the ability to combine them. So you can do like 2 markets in, two events in one, or 3 in one, where you're basically speculating on like, you could do one like, what would the GDP be if Hillary Clinton is elected? And so with that stuff, you can basically represent really any state you want. The one caveat or limitation is when you have a lot of outcomes, like let's say you combine 3 markets or 3 events and you got a market with like 100 outcomes, that's not going to work with an order book, because unless this was like, even if it wasn't the center of financial trade, it would just be too much for people to comprehend 100 different order books for one market. And then the other thing is, even to use the LSL for that 100 different outcomes is just too much for most people. If you can make it easy to understand, it's doable. But in the early days, I think it'll mostly be markets with like, around 8 or less outcomes in the early days.
Along those lines, the example you gave about derivative contract that could be very complicated. I've seen some of them. There's thousands of outcomes. That wouldn't be possible in the short term.
Yeah, that's right. Short term, not really doable.
Kind of along the same lines, if I was asked randomly to report on an event that I have no idea or confidence that I could report correctly, how would I handle that? Would you just kind of, I Google something and maybe it's like it's an event in a country that I have no idea what the sporting event even is, or because I'm reading The Onion, or
right. Yeah, so there's a few things. So one is hopefully the market creator put like a resolution link. If they didn't, then we'll go into that. So the way that works is, one is like, well, you could talk in the comments with other reporters, maybe they, know what happened. It's not really ideal. So the third solution is, you're actually selected to report on twice the amount of things you have to report on. And then you only have to report on half of them. So effectively, you're reporting on, like, if you're supposed to report on 10, you'll be selected to report on 20, and you should report on 10. So at least you kind of an out there to kind of like pass on the market. The one issue is, market may not get resolved in that case if everyone passed. But there's a mechanism to kind of fix that, where it's pushed back to the next period and anyone can report on it.
Are you concerned about like long closing times? I understand it's at least 2 months.
Yes, so I was actually writing a blog post today about that. That's like a super common question. So there's a few things there. One is the closing times, like it depends on how liquid the market is and how efficient markets are. In theory, people should buy things up to like 99 and hold until the end and then make the profit or whatever. In practice, that may not happen. So there's always kind of solve that problem. That's what my post will be about. And in a nutshell, it's basically like you can kind of resolve something like in a very easy kind of like, let's say, fair way, kind of. And then if it's resolved wrongly, then the reporting system kicks in. It's kind of a nutshell. I'll get into that in deeper in a post in a few days.
I can see how some people would not be excited about predicting the future. Are there any stories that you can share with us where people were fundamentally opposed to the whole initiative?
Like me personally, or like Augur personally, or like
prediction markets in general?
Yeah, I know Ron touched on it in his talk. So there's this market that the CIA was going to create. Funny enough, the CIA has this long paper on the website. It's like a huge defense of prediction markets, which is kind of funny. Because other agencies in the government don't like them so much. CIA loves them. So anyways, this project was called like Future Map or something like that. And it was a project in DARPA. And basically the idea was, well, if we make financial markets predicting whether a terrorist attack will occur in a certain location at a certain time, there's probably some disgruntled terrorist out there who sees a chance to maybe put a buck and he'll bet that it's going to happen. So the CIA was like, well, okay, we'll do this, we'll have them place a bet, and then we'll stop the attack before it happens. Given like the NSA relations, our government's not that confident, so I'm not sure how well it would work. But and Congress hated it. So the opposition, Congress hated it. They're like, this is gonna, be terrible. It's like the moral downfall of America, all this stuff. And so they basically ended up like firing the guy who headed the division of Barclays that started this project, and then removed funding for the project. By the way, this is all the night before launch. So Congress defunded this, fired the guy, everything day before launch. That's why like the most vehement opposition to prediction markets. Of course, InTrade has issues too, but this is probably the clearest example where people are just like, this is terrible.
Not to mention, if they're successful, the terrorists will lose money, and then they'll stop betting.
Yeah, it's like a problem that nobody's proposed, but it's a clear problem, right? Because if the terrorist realizes that, well, the CIA is going to be successful, therefore I shouldn't bet, InTrade would say he would never participate. I guess they're assuming terrorists aren't that intelligent, I don't know.
Maybe I misunderstood what you said before. Can you have a contract that's US dollar denominated and just use the digital currency as a means of transacting? Or do you actually have digital currency like volatility risk?
So right now you have volatility risk. Basically, we want to keep the platform as simple as possible. It's already very complex. So basically what we kind of do is we kind of make it so you can use any subcurrency on Ethereum. I guess the new word now is token. That when we started, it was called the subcurrency API. So the idea is that someone could create something that's stable, whether that's based on the contract for difference where you're just using Ether, someone has a bunch of Ether backing it, or whether that's something issued by like a big bank, or something issued by a sort of decentralized fashion, kind of like this project called Meter now is doing this. So the answer is right now, no. Long term, a few years from now, that's where we want to be because that's where your actual trading volume from an average user.
Could you offer like an auto hedging feature or something like that?
So you could. The problem,
market, right?
Yeah, you just make a market on it. The one risk is that you would get it would add margin wall to the system, which is like something that's confusing for a lot of people. So yeah, it's like something we thought about, but I think the way to do it is to abstract that out to a subcurrency and have that deal with it. It could be a subcurrency that you can use to Augur reporting system or something as a mechanism. I just don't think it should be a core platform itself.
Yeah, but I wasn't clear. You mentioned earlier about the limitation on risk on a stop. So how does that work? Is it that the trade is a certain like a forced stop, or you get sold out at a certain point?
So it doesn't actually like sell your shares. What it does is it's like, to give you an example, let's say we had a market on the price of Apple, like, I was gonna say like, say it's like right after the split, right? And we had a range, we had minimum value 0, it's not going to be negative, the next one we said is like $100 or something. Let's say Apple shot up to $150 a share. What would happen is, you'd only get the profit up to $100, because beyond then it would be like, in the real world, it would be basically a margin call. In Augur, it's just you have one or two options. You can sell to someone else who wants to buy it for 100, would probably be a little less, or you can wait until resolution on which it resolves at 100. So it's the easy way to get around this is just make the range wider. So make the range for a stock lower than you think it would go, and higher than you think it will go. Good amount higher. That way you don't run into that problem.
Just using a bounded range, just can't exceed the range limits. That's the only way to keep the integrity of the system with no counterparty risk. All the risk is in the system, and it'll be just redistributed when it resolves.
Yeah, so is two-factor authentication going to be possible?
It is with the Airbus thing, and at the core platform like itself, like on the client side part of it, no, because there's like no one to operate 2FA. Someone figured out how we can do decentralized 2FA, that'd be cool. And I would love to implement that if somebody figured it out.
Are there any safeguards to prevent a market maker from creating a market which they have direct control of the outcome of?
So, like they're a reporter basically. So the main kind of, it's not really a safeguard, it's just like you're manually selected to report on stuff. So odds are you're not going to be reporting on it. You're reporting on the market you created. If you were though, it's not that bad of an issue because if you were to try to cheat the system, it just ended up falling back to one of the backstops anyway.
Maybe I misunderstood your question, but I interpreted it differently. What if you were literally the person that determines the outcome?
Yeah, that was
not
that was
just
actually-
reporting.
Oh,
So let's say Donald Trump bets against himself.
Right, yeah, so that's an interesting discussion, and I think Augur made a lot of us about that actually. It's like a thing there's a lot of debate on. The markets would have to have a ton of volume for it to be relevant. And even in many cases, like financial markets today, it is relevant, but stuff doesn't really happen. So to give you an example, anyone with a high level exec at a company could make some drastic decision and then buy a ton of money on options, whether it's short or long, that are going to expire at the end of the day. And they could make tens of hundreds of millions of dollars on doing that. But it doesn't really happen in practice. So that's one kind of counter argument, is that in theory it's possible, but in practice we kind of see it a lot. Where you do see it, it's like people throwing football games or something like that, which, according to Bio, is like already a problem. So Augur might contribute to that a little bit or something, but I think the incentives outside Augur are really higher. So the thing is, like, let's say you're trying to incentivize X event to happen. Generally, with the prediction market, anyone can buy the other side or buy that side. So if you want to incentivize an X event to happen, your best odds are to bribe the person who's related to X event. That's where you're going to get the highest ROI on your investment.
The person who creates the prediction market, like what type of risk does he assume? So, like, take your sports betting example. Like the bookies, they're not gonna. I mean, it's not all risk free for them. They do take their percentage, but they do assume risk too in the payout. So how much risk does the person who created the prediction market assume?
So the answer is there's two parts to it. One is you assume a bit of risk in the market creation fee, which basically it goes to like the reporters, so you have at least a bit of money to pay the reporters in case no one trades your market, that's not a lot of risk. The part where you can have a lot of risk is when you're providing liquidity. So the answer to that is basically however much risk you want. So like, for instance, you could offer to buy something at 0.001 and offer to sell it to someone at 0.999. Of course, no one's going to trade your market if the prices are that bad, but in theory, your risk is like a tiny, tiny amount. So the answer is really, kind of how much risk you want to take. If you want to trade a market, and you want to provide $50 in risk, and you want to set, what prices you want to sell it at, you can do that. If you're a huge market maker and you have $100,000 to make on a market, you can do that as well.
Is there going to be an age requirement, in other words, prevent people from underage bidding on it?
There's no way to, like I said, there's no way to detect your age on the internet. Of course, you have like all these privacy agreements and everything, like say, like if you're under, like usually if you're under 13, don't use our site or whatever. But in practice, on the internet, it's almost impossible to know how old someone is, especially when they're like behind this anonymous address. The one thing is though that it's right now it's actually pretty difficult to get Ether or Bitcoin, and you generally have to be 18 to get it from those places. So the edges of the system kind of select for that. Or at the least, even the person's parents probably okay with it, unless they like bought Bitcoin, like meeting someone in their town or something with like a cash transaction. In which case, there's like no way to tell that.
So this is really for Ron. What is your approach in dealing with the regulatory agencies when they start making inquiries?
So, can you repeat the question?
Yeah, what's the approach for dealing with regulatory agencies when they start talking to you or making inquiries?
So from my perspective, Augur is a piece of software. It's just out there that anybody can use, for the purposes that they see fit to use it. So for the regulators to, take issue with the software, they have to have a reason to do so, which means some operator is operating the software illegally. And on that basis, that would be the type of route that a complaint would take. From Augur's perspective, they're not the operator. They provided software that other people are using it. So just a public context about it. There's never been a prosecution of someone who's made a sports bet in this country, but there's been a ton of prosecutions against companies that offered sports betting in this country. So right now the approach in the United States is to go after the operators. But in this case, there's no operator. And that makes it difficult to impose that type of concern. Now, the current attitude of the CFTC and of the UK and the FCA is to be very permissive of new ideas and to understand what this technology is. Nobody's really come out, or at least in those two jurisdictions, and saying this is illegal, this is not going to be, able to be used for this and that. They're very accommodating to what the new ideas are going to be. So, people are going to learn. But I guess the whole Augur project is just a symptom of this new type of technology. It's very hard to control. It's very hard to impose upon. That's the beauty of it, and that's the fear to regulators. So there's going to be some, 3 steps forward, 2 steps back in learning how to do it. And I guess, it goes to another point about the technology overall. We would hope, like Augur would hope, and my efforts to try to figure out ways to make money from the platform and to use the data and create the data, we would hope that we can set some examples, but a lot of other people will contribute to the success of this platform. We hope that there's multiple UIs. We hope that there's multiple content expertise. We hope that there's multiple ways to use the data and mine the data. So, there's a lot of financial value in running markets. Augur is a platform that anybody can use, anybody can rent in any parts of the 3 main parts of the ecosystem. And all of those are profit opportunities for other people to layer onto. Some of them will be from regulated jurisdictions for betting and gaming. Others will be the Wild West. This is going to evolve. I mean, this is day one. We talked about business plans today. They're 15 years in scope. This is the very beginning of things. So it's hard to know exactly. It would be very pedantic.
Right, so just to attach to the previous question, so you expect other companies to develop
hope.
They would have to be located outside the United States, otherwise it would be regulated by
Somewhat. I mean, the activities that InTrade was found to be guilty of wouldn't have been found to be guilty in another jurisdiction.
What are your thoughts on your platform being used for illegal activities like money laundering or illegal trades or?
Yeah, so
It could totally be bad. I know, but how do you thought about it?
It wouldn't really work very well in my opinion. So the thing is, Ethereum is pseudonymous. It's not purely anonymous. There are products like Zero Cash, which is not on Ethereum, that you could use to actually do that pretty well. But right now, if you want to do like money laundering using crypto or something, it's actually really difficult because once you get a cryptocurrency, for one, to get crypto, you have to buy it from somewhere. And if you're doing a lot of volume, it's very difficult to, like, if I can't put an ad on multiple Bitcoins and want to buy $1 million worth of Bitcoin, it's probably not going to get picked up. Maybe if I comparison time or something, maybe you can trade, but it's probably not going to happen. So that means I have to buy it from an exchange somewhere, which is an entry point. To aid it, you kind of have to do the same thing. So you can hold on to the Bitcoin, which means you just hold it, in which case it's not really being spent. The other thing you can do is you can buy real goods with it. It's a very easy place to catch criminals when they buy real goods. And the other thing you can do is just go off to an exchange and you get the money that way, which is also really easy to catch it. Saw stuff that actually I saw a talk by some law enforcement guy in the Netherlands who was telling me about all this stuff. It's actually pretty surprising how easy it is for them to catch criminals using blockchain. So basically the short answer to that is if you're going to launder money, there are way better ways to do it than Bitcoin or Ethereum, like cash or gold.
And, just a different way to answer the question that, there's a lot of things that can be used for bad, that, cash can be used for bad, and credit cards can be used for bad, and the internet and email. And this isn't the solution that we're trying to present. This is a way to transfer risk. Some people will use it in ways that are inappropriate or considered to be unethical, but the point that I was making and part of my talk was that at the end of the day, is this way more good than bad, and you have to believe that it is.
Yeah, at the root, it's a tool, so you can use the tool for good or bad.
I think you mentioned at one point that there's not really any anonymity of who is trading what. Are you worried about liquidity drying up or front running, or if a significant player were to come in and build up a position over time, therefore disincentivize larger players from being active on the platform?
So I'm not really, so while it's not purely anonymous, it is pseudonymous. So on the other side of the coin, it's easy for people like law enforcement to detect who you are. It's not easy if you're trying to detect who an institutional trader is. It's probably very difficult unless you have access to the tools that law enforcement has. So that's not a big concern. And the other thing is, it's about people buying. What was the second part of the question?
Yeah, it's all tied to that. So if you're saying it's not really that transparent who is trading what, it's not possible for another user to find out who is on the other side of the trade.
I think even now it's very hard to monitor your own hash of a blockchain transaction. So all the detail is there, but it's not that easy to get to. And once you get to the detail that's available, it's hard to connect that to a person.
Well, the other part is about front running. So yeah, I'm not super concerned about front running because there's a commit and reveal. So you have to commit your trade before you do it. It doesn't have, all it has is, it's just a hash. You don't even know what market a person's trading in, the amount, or the price.
Joey, why don't you take 2 more questions?
So one of the cool things about Ethereum is the potential for synergies. And you mentioned Maker, stablecoin. What other applications of Ethereum are you excited about for Augur?
Another interesting one is EtherX. So it's an exchange built on Ethereum to exchange things that are like Ether or Bitcoin, things like that. Or ref on Augur. So that's kind of interesting because it could be a way to determine the market cap rep during the event of a fork, which is kind of useful because people may want to use that to decide which forks to create markets on. If they wanted to do that in a decentralized fashion as opposed to looking at the price on the coin market cap or something. So EtherX and MakerDAO and anyone else who's working on stablecoin that I don't know about are all things I'm excited about.
I want to add one thing. So the ability to use rep for other things besides resolving order markets, that is to resolve anything on Ethereum, there has to be a way to take things that aren't on the internet and put it on the internet or on the blockchain. And there's quite a few different types of applications that reporting can be used outside of reporting on a prediction market. So there's a wide world to use a very decentralized reporting system for social good.
How do you generate a random number to determine which rep becomes active and which is dormant? And can miners game that?
It's not for determining whether it's active or dormant. It's for determining what events you're subject to report on. Technically, if you're a miner, you're mining block, you can keep mining until you got another block. Because it's just based off of timestamp and your address. But it's not something it's not something we really put a lot of time into making that. It's not really focused on security, and the reason is because of all the backstops. That it's not it's the first wave of reporting where it's random. You're reporting on stuff randomly. It's not super secure. You can probably falsify something with some number less than $1 million fairly easily. The security lies in the backstops, where everyone's reporting on something and where there's a fork. Those are the parts where the security matters most.
You keep saying fork, but are you talking about the Ethereum blockchain?
No.
Okay, can you describe what you mean by fork?
Yeah. So the interesting thing about Ethereum is you can actually fork stuff on top of it. So you don't want to fork Ethereum itself because that would be forking currency as well, which gets way messier. What we do in Augur is a fork is basically a fork of reputation. So on the Trump fertility market, and let's say the network disagrees, and everyone reports on it, the network still disagrees. Basically fork into 2 sets. So one set is saying Trump won, the other set is saying Hillary won. And then from then on, when someone wants to create a market, they can choose whichever one, the logical thing to do is to choose whichever represents reality. That's where all the traders would go as well.
If they go to the dishonest one, the rep theoretically has no more value, and they may have had a market profit, but they've had a system loss.
So Ethereum, where do you see the potential to build a new political operating system? I'm not sure if this is off topic.
A new what?
A new political operating system that supersedes the nation state?
Oh.
1 minute for that.
I'm not an expert on that. Something people talk a lot about with prediction markets, like the idea of futurarchy. So predicting, using prediction markets to kind of make decisions, like prognosis or whatever, propose a DAO to basically use futurarchy to make decisions on the DAO. But it's something that I think it's like in its infancy. I think it has potential, but I think it just needs to be worked out. There's different proposals for it. Like Robin Hansen has a proposal for futurarchy. Tally has one for futurarchy. Actually, I like Robin Hansen's a bit better because it relies on actually putting money at risk, whereas Italic's is basically rewarding people that you don't lose money if you're on the wrong side of it. So I like the idea of putting money at risk at all times because that's the best way to get, put your money in your mouth is.
Keep it real.
I guess that's it for questions because you wanted to talk. So please stop after and ask anything you want. I'll be out there.
And one more thing for those that tweeted, it was actually a little bit more than I thought, and I made the mistake of not counting. So what I'm going to do is I'm going to name the first few and then name the rest. And I think there's enough for everyone, but Coin Fund, and then after Coin Fund I have names for the most part. Kyle, William, Dean, Joseph, Sandeep, Pierre, and then after that, I'm sorry, the other three were the cutoffs, no offense. Brennan, Fred, and Death and Taxes. So if you will, I'm going to get back with the shirts and I'll take care of you. Thank you, by the way.